So today is an absolutely insane day in the crypto space, one that is going down in the crypto history books, absolutely for sure. Because what has happened today is that one of the biggest cryptocurrencies by market cap, LUNA and the UST stablecoin, the pairing of them, it completely collapsed in a coordinated attack. And as a result, that could have spillovers and contagions into the rest of the crypto market. So in this video, what I'm going to do is I'm going to try and explain in simple terms what happened today and basically what I think the potential effects from that could be spilling over into the rest of the market. Real quick, if you are new to the channel, please consider subscribing down below. Click the notification bell so that I can update you with future uploads, and if you want to get on my email list so I can let you know whenever I publish a new video or when there's an important update, it is the first link in the description down below. You can also follow on Instagram, Twitter, and join our free public Telegram. The links are all in the description down below. Alright, so I got a few talking points here written out and we are going to go through them basically one step at a time, starting with the LUNA UST collapse. So let's start out by looking at the LUNA chart against the US dollar. So LUNA against Tether USD. Basically, you can see it's currently trading at $2.26. It actually went below $1. And the crazy thing about that is that just over a month ago, you can see over here on the 7th of April, the 6th of April, we were trading at almost $120. So basically, this lost close to like 98% of its value in a period of just over a month. It is an absolute collapse. And basically one of the last times that we saw something like this was with a Ponzi that collapsed back in 2018. It was called Bitconnect, and I could show you that chart right now. So you can see right here on the screen, this was a Ponzi, a literal Ponzi. Okay, it was called Bitconnect. It had the same similar crazy run up, and then it completely collapsed, went to zero, and it absolutely never recovered. Now Bitconnect was a classical Ponzi, basically promising to be able to get 1% yield every single day using their trading bots, which essentially never existed. And it was basically just a Ponzi scheme where they were getting new funds in from new users to pay out the interest or the gains, the profit from the bot that they promised using new users' funds. Classical Ponzi scheme. Eventually the whole thing collapsed. You can go read up about that if you want. But look at that chart and look how similar it is to the LUNA chart that happened right now. You can see very similar run up over a period of about a year. Double peak, so a slightly higher high over here was actually a negative divergence, and then a complete collapse almost to zero. So is LUNA a Ponzi, yes or no? We will look into that in this video. Also, I'll give you all those facts and you can make a conclusion based on that yourself after watching this video. Okay, so let's start out. First things first, for those of you who don't know what LUNA is and what UST is, it's Terra, it's a stablecoin. Basically, we can go over here to the website terra.money, and what they're saying it is programmable money for the internet. So it is supposed to be like this whole ecosystem where you can spend, save, and stake. And that was also one of the key things about this ecosystem, is that there were basically two coins. So you have LUNA, which is the cryptocurrency, and UST, Terra, which is supposed to be the stable coin, which maintains a peg of 1-to-1 with the US dollar. So just a little side note, stablecoins, for those of you who don't know, they are supposed to be the cryptocurrency technology. So it operates on the blockchains, like on the Ethereum blockchain, for example. It is a token that has the programmable features of cryptocurrencies, but it's not supposed to be volatile. In fact, it's supposed to be an equal value of 1-to-1 with the US dollar. So that 1 unit of that stable coin is always going to be redeemable for $1. And then the benefit of that is that you can use that for all sorts of applications within the crypto space. Programmable money, you can send it over the blockchain, it's faster, it's cheaper, all those kind of things. Now, as you can see, we have a lot of different types of stable coins over here, the biggest being Tether USDT, which has been around for a very long time, which has a market cap of $83 billion. Second biggest currently is USD coin, USDC. This is by Coinbase, by Circle, and they actually are audited to show that they have the reserves to be able to prove that. So in theory, if you have, for example, here $48 billion worth of USDC, in theory, the Coinbase and Circle team that are behind this stablecoin, they should be able to have an equivalent amount, roughly very close to actually, of $48 billion. So that should be in cash reserves or assets that are pretty liquid with very low risk or minimal or no risk to be able to match that. So in the case that people who have this $48 billion in USDC, if they want to redeem it, they should be able to get $48 billion back for it. Now, of course, that borders a little bit on fractional reserve, where the theory is basically not everyone who owns USDC is going to want to redeem it all at the same time. So that's where it gets a little bit into the gray area or the dodgy area where we don't really know with some of these stable coins how much assets they actually have in reserve. For example, with Tether, nobody really knows. They've produced some documents that show some stuff, but we can't really see. That's why I like USDC, because Coinbase is a publicly listed company and they have audits. So out of all the stable coins, basically USDC, in my opinion, is the most compliant. With the stable coins, you basically have two different types of stable coins. You have centralized stable coins, which is, for example, like Tether and USDC. They have an entity behind it, a company, often a public CEO, documents, licenses, all that kind of stuff. And they have the option also to be able to control that. And in case of criminal activity or whatever, they can actually freeze addresses or freeze tokens of their stablecoin. Then we have decentralized stablecoins or algorithmic stablecoins that are basically working on cryptocurrency and DeFi technology without a central entity being able to interfere with it. Now, they can have teams behind it, obviously developing the stablecoin and working on the project, but the idea is that it is based on code that basically functions on its own without human intervention. And that was the idea behind Terra and with their counterparty, LUNA. So now that you know what stablecoins are and the idea behind this algorithmic stablecoin Terra USD, let's dive a little bit more into what is Terra and what is LUNA. Okay, so what I'm going to do real quick is play you the official Terra LUNA explainer video real quick so you can get an understanding of how their system works.
How does Terra work? This is one Terra US dollar, or UST for short. It's a currency built on Terra's blockchain. The price of one UST is determined by how many people want it, and by how much UST is available. Let's imagine the entire Terra economy as a pool. The size of the pool is determined by the total supply of UST. If more people want UST, the tide rises, and if less people want UST, the tide falls. The height of the pool represents the value of each UST. If you can do more with UST, like buy coffee or invest in stocks, more people will want to buy UST, driving up its price. To bring back the water level to $1, we can expand the pool by introducing a new supply of UST. But where does new UST come from? At Terra, we've designed a machine that swaps $1 worth of LUNA to 1 UST. Investors who predict UST will be more useful and used in the future can buy and hold LUNA. When the value of UST rises above $1, any LUNA holder can swap $1 worth of LUNA for 1 UST and sell each UST for more than $1, making a profit. The newly introduced UST expands the pool, bringing its price back to the $1 peg. Now, LUNA is more scarce and therefore more valuable. During times of contraction, any UST holder can profit by swapping UST for LUNA, raising the price of 1 UST back to $1 US. As UST becomes more useful in the long run, LUNA holders are rewarded for assuming the risk of short-term price volatility. So how exactly does the machine work? When LUNA is swapped for UST, a certain percentage is burned, and the rest piles up in a community pool. From the other end, new UST is printed. This process is called seigniorage. As more applications are built using UST, massive demand will cause price to deviate above the $1 peg, meaning we need more LUNA swapped for UST to expand supply. Meanwhile, LUNA becomes more and more valuable and the community pool accumulates more funds. The funds in the community pool are reinvested to build more apps that use UST, and the virtuous cycle of growth continues. Investors who hold LUNA see its value rise during times of expansion, and if they choose to stake, earn transaction fees on UST. Even when demand for UST is low, Terra's algorithm automatically increases fees so that validators are always rewarded with a steady cash flow of UST. With LUNA, you can do so much more than earn passive income. LUNA holders can participate in Terra's governance process, proposing or voting for changes in transaction fees, seigniorage allocation, tax rate, and many more. LUNA not only collateralizes UST, but also many more world currencies like Korean won and the IMF SDR on the Terra blockchain. Much like the Moon, which stabilizes the Earth's rotation, LUNA and its stakers are essential to Terra's stability. Join us on our mission to create a truly open and transparent monetary platform that no one controls, setting money free for billions worldwide.
Okay, so basically, as you can see, there is an arbitrage human element to it where the design of the stablecoin is basically that when the peg goes below $1, so what it means is that the public can basically step in and can arbitrage this and be able to profit from it, which in theory would drive it back to $1. And if it goes over $1, in the opposite it works. So basically through the economic incentive behind fluctuations of that peg, in theory, it would maintain that peg. Now, the problem is that this is exploitable. It's obviously also a big experiment because it got into the double-digit billion-dollar market cap valuation, which is absolutely huge. And as you know, with any type of cryptocurrencies, especially DeFi type protocol with code and smart contracts and blockchains, there are vulnerabilities that's possible to be exploited, and there's also potential for just honest mistakes, bugs, and things that we just don't know how they work until it gets big enough and something breaks. And unfortunately in this case, maybe it was a combination of all those factors together combined with maybe some malicious intent, as we are going to look at right now. So let me walk you through one or two threads over here that explain it very well. I'm just going to walk you through that quickly, and then if you want to read more about it in detail and you want to go research, all the links to what I'm sharing with you here are in the description down below. So basically this is what happened. An $18 billion stablecoin lost its dollar peg with all the magical chaos of algorithmic stables with a dash of Bitcoin systemic risk data. Okay, so UST, that is the algorithmic stablecoin that's supposed to be a dollar peg stablecoin. It has depegged, okay, so it lost its $1 value. So meaning that people who own UST could no longer redeem $1 of UST for $1, right? So they could actually, it started dropping and it got to 90 cents. So it means for every $1 worth of UST, they can now only get 90 cents back. And that absolutely collapsed. We'll share with that later on, but it went into 30 cents, I think even lower than 30 cents for the dollar. So this is obviously a huge loss for anyone who held UST, and that's obviously everyone's worst nightmare if you're holding a stablecoin and it loses its peg and it becomes worthless and you just lost half your money in stablecoins or more than that. The whole point of stablecoins is that you don't have volatility risk. So that was a big issue here, and that's something that could potentially have a lot more ramifications going forward. We'll talk about that a little bit more. But okay, just a reminder on how UST works. I've shown you the explainer, so by now you have an understanding about it. You can always redeem LUNA for UST, dollar for dollar, and vice versa. If LUNA is at $50, you can redeem it for 50 UST, and vice versa, you can redeem 50 UST for 1 LUNA. So it is worth noting that you can always redeem 1 UST for $1 worth of LUNA, even if UST is worth less than $1. Like I explained, that is a stabilizing mechanism with the arbitrage that kicks in to help that, you know, stay at $1 when it goes above or below. So we know stablecoins require utility to maintain demand and defend their peg. So where does UST get utility? Anchor protocol. And this is where things start to get a little bit sketchy and start to have those Bitconnect vibes. Like, remember, Bitconnect was a big classical Ponzi that promised 1% returns per day, and basically they're using new money to pay out the interest to new users, to suck in new users, and so on and so forth. Classical Ponzi. Now, with Anchor, you could basically use UST, stake it in the Anchor protocol, and make 19.5% per year. Okay, so that's obviously a lot less than 1% a day like with Bitconnect, but 19.5% per year is absolutely phenomenal. If you do the math on that, it's unsustainable long term. Okay, they can't continue to pay 19.5% because that's got to come from somewhere. So how do they pay such high yields? And that is something you have to ask yourself again. I mean, look at what the banks are paying. The banks are barely even paying a fraction of a percent in interest, right? Even if you get 5%, that's already high. 10% is already insanely high. 19.5% is basically unheard of, and either unsustainable, that it has to come down because, you know, it's just not sustainable, or in some way it has to be some sort of Ponzi scheme. And this is already where you start to see red flags. And obviously such high yield obviously attracts a lot of capital, a lot of people willing to gamble on it, a lot of people willing to take those risks because that yield is very, very high. And where else can you get that? In a supposedly stable coin that has zero volatility risk, and the risk of a depegging is supposed to be very low, but as you can see, it did happen. So how does this unfold? Let's continue. So a huge proportion of UST's circulating supply is Anchor. Right now it's only about 40%, but it's been as high as 70% historically. So why do you hold UST? Well, because they're paying you 20% per year to hold it. So a lot of people ended up buying UST to be able to stake it to get those yields. So the question becomes, how do you give out 20% of free money every year? And again, that's where the red flag comes up. When something sounds too good to be true, often it is. And I know in crypto, there's opportunities when something is new, when something's small, when it's growing. Sometimes those yields are insane and it is legit, but they come down very quickly because it's not sustainable. But when something stays that high and sounds too good to be true at huge values locked at $10 billion, $20 billion, that is a red flag. Okay, more often than not, it ends up either collapsing, failing, being exploited, or downright being a Ponzi or a scam. So let's figure out what the LUNA token does. And here he says, I'm not going to focus on what drives its fundamental value and focus, instead narrative. Every UST in circulation reduces the circulation of LUNA. The win scenario in every single LUNA on Earth is gets burned for UST. So you can see the basic appeal. The more UST, the less LUNA. Holders should want to diamond hand LUNA because, in theory, reducing the supply of LUNA should increase the value. And there's unstoppable demand for UST, and you're the last LUNA holder, you have immense redemption power. Okay, all of that is explained on the website. So let's get back to the LUNA Foundation Guard. UST has the same dynamics as many other algo stables, except in addition to the algo part, they have the LUNA Foundation Guard. In other words, UST, the stablecoin, is backed by contracts and the gigantic gravity well created by the size of Do Kwon's nuts. Okay, so Do Kwon is the founder behind this. That's another thing we need to look at. And he started getting really, really obnoxious on Twitter. I'll show you some tweets in a second where, you know, he's basically condescending, like, I'm the master of stablecoins, everyone else is poor, I'm gonna destroy other stablecoins, like really, really crazy talk. Basically, someone like that, you would call them literally insane, or it seems like a cult or a maniac or whatever you want to call it. Someone like that at the head of a major, major project, you know, that's $10 billion, $20 billion or more, like, you don't really want to see that. That's another red flag coming in over there. So you basically have this person over here, Do Kwon. It's at StableCoin on Twitter. He calls himself the master of stablecoin. You can go through his tweets, but you can see it's just very condescending type stuff where he's just posting things like that, you know, where he's just making jokes like, oh, UST depegging, you know, everyone's poor, blah, blah, blah. And he's tweeting like this. He's supposed to be the founder of a major project that a lot of people have invested a lot of money in. And again, having seen this, having been in the space for a long time, when you see people starting to talk like that, it is often very much a red flag, because why would they talk like that? So that's the second red flag there already. So now that we have this basic foundation, basically what happened is that there was a coordinated attack, or allegedly, that's the information going around. There was a coordinated attack to depeg LUNA and to not have it be able to recover. And because of that depeg, it created panic. The UST holders that were seeing the value of their UST not being able to be redeemable anymore, seeing it go down, created more panic, which created more selling, which resulted in more of depegging. And as a result of the design between UST and the LUNA coin, we got this major massive sell-off of the LUNA token, which then trends towards zero as the peg breaks. So you can see over here, as with all algo stables, the downward cycle or death spiral, they call it, is the opposite of the upside. So when UST is unstaked and dumped, UST depegs due to downward pressure, which means that UST holders redeem for $1 of LUNA, and then they dump LUNA. And what makes it even more complicated is that LUNA and DXY, the LFG, the LUNA Foundation Guard, they also ended up buying Bitcoin to actually back their stablecoin. So all of this, basically, as you can see, as I'm trying to explain this in the easiest way possible, is it just sounds like a giant Ponzi or a giant house of cards that was unsustainable. It was exploited, and it all came tumbling down. And whether or not this was created with malicious intent, there was a coordinated attack, seemingly, where Bitcoin was borrowed, forcibly was put a lot of pressure on it until the protocol broke and ended up collapsing. Either way, a lot of people lost a lot of money with this. Unfortunately, I hope that is not you. I hope that is not the case for you. But you can see these experiments in tech, in crypto, in DeFi, whether it be a stablecoin or a DeFi protocol or everything like that, it is highly risky, and these things can drop enormously and even go to zero. So you always need to be very, very careful with anything you invest in crypto, because it can, and every now and then it does, end up really collapsing or going to zero. And obviously a big consequence of this that happened, because it was such a huge amount of money as a market cap, and it unwound and unraveled so quickly. So immediately US Treasury Secretary Yellen points to UST slip, asks for new stablecoin legislation by the end of 2022. So this literally just happened. These articles are already going out, stablecoin regulation. So that makes you think a little bit, maybe was this coordinated? Was this all set up in a way to let LUNA, build up like this and take a huge fall so they can usher in stablecoin legislation on the other stuff? If you may recall, or maybe you've heard about it, is for a long, long time, there has already been investigations into the other stablecoin Tether, USDT. It was with the New York Attorney General. There was a lot of investigations there looking at whether or not they actually had the reserves that they claimed to have, and so on and so forth. And everyone was always scared of USDT imploding. Then nothing happened with that. It still exists, and it might still very much be a risk that could also implode at some point in time. But now we have this LUNA UST coin that basically hasn't been around for very long, less than 2 years, I believe. And it had this massive run up, it became huge, lots of money locked in, and it completely collapsed. And now, all of a sudden, all the regulator focus is on this, and there's probably going to be strict and serious regulation coming towards other stablecoins. So once again, I can't tell the future, not financial advice, but my best guess from, being in the space for a long time is USDC probably has the highest chance of being an official, regulatory compliant stablecoin, because it is by Coinbase and Circle, publicly listed companies. They have financial licenses, there are audits, and so on and so forth. And just be very careful with other stablecoins, because we don't really know what's going to happen in future with regulation, and potentially if it's going to be able to maintain its peg one-to-one with the US dollar or not. So as you can see, LUNA is now trading at $1.60. It was already at 80 cents or below 80 cents earlier today, but you can see it absolutely collapsed. Is it going to recover, yes or no? That's the question that we're getting all day. I don't know. Maybe it will recover, but maybe it won't. Maybe this is just one of those things that's absolutely just going to die and go to zero. There's no guarantee that this has to recover or that it even has to bounce. Okay, maybe it is just dead. So be careful with this. I know a lot of people are saying, hey, maybe I should buy this. It's dropped so much, maybe it should bounce. People have been trying to buy this all the way down at $40, at $30, $20, $15, $10, $5, 4, 3, 2, 1, and it keeps going down. And maybe it actually goes to zero. So be very, very careful with this. Personally, I am not buying it. I'm not touching it. I'm just watching what happens and seeing how it plays out. But again, the point is, what kind of effect will this have on the market going forward? Bitcoin is still holding up relatively well, although it has just poked below $30,000. And as I've said in the previous video that I made a couple of days ago, once we got below that 3-day moving average, the risk of a capitulation is there. The risk of going down towards the 200-week moving average on Bitcoin, which is around $22,000, low $20,000, it is still a possibility. And if the stock markets sell off more, if anything else happens, there's possibility of further downside. Now, the good news, as I also said in the previous video, is that this is likely to give an enormous buying opportunity. We have been through this many times in crypto before. The last major bloodbath and sell-off was in March 2020 with the health crisis sell-off. We had almost 50% drops across the board over altcoins, everything like that, and it ended up being the bottom, a generational buying opportunity really. And if you would have bought that crash, that capitulation from those lows in March 2020, I mean, the upside was huge. It's 50x, it's 100x, and even more on some altcoins. And it was just absolutely an amazing opportunity. So even though this is scary, even though this is fearful, crypto is here to stay. Digital assets are here to stay, in my opinion. This isn't going anywhere. But, you know, we could have some more pain. We could see some lower prices that could take a little bit longer. But eventually, we are going to bottom. We're going to get an amazing opportunity. And then in the next bull run, however long that takes, eventually we will see some sort of recovery. So there's always two sides of the coin, so to speak. And if you are prepared, if you manage your risk, you don't overexpose, don't use leverage, and if you're here with your risk capital and you're ready to buy that capitulation, there is some huge potential upside in the future, in my opinion. So I know this video was a little bit longer than usual. Hopefully this helped you understand the situation a little bit. Hopefully it gives you some clarity. I will add links to further resources and everything that I covered in this video down in the description below. So if you do want to read more about it, you want to go check it out, at least you have a starting point and you can dive into that further. Make sure to subscribe to the channel if you haven't done so already. Follow on Instagram, Twitter, join our free public Telegram. The links are all in the description down below. And if you do want to learn more about crypto, if you want to navigate the markets, if you want to see what I'm personally doing when I think it's time to buy or sell, whatever I'm doing, I share that personally with my VIP members. The link is the second link in the description down below. If you want to join Intelligent Cryptocurrency VIP, you can do so. 60-day money back guarantee, so there's no risk. Come join the Discord, check out all the materials, get the newsletters, and if for whatever reason you don't like it, within 60 days you can get your money back. But it is the best place to be if you want to learn more about crypto, you want to get started, you want to understand how this all works. Come and join us, check it out. Second link in the description down below. Thanks for watching, and I will see you in the next video, which might actually be pretty soon as we navigate these crazy markets.